Hi, and welcome to this short presentation, Forex Without Fear. I'm going to show you how you can take the anxiety and a lot of the uncertainty out of your trading. Many traders get caught up in the frenzy of trading the spot price on a short-term basis. Trading the noise can be hard on your emotions, and it's hard to consistently profit from trading noise. Trading the long-term drift in the spot price is more relaxing and, I believe, more profitable. You spend more time analyzing than trading. Using options is a great way to trade the drift, and I'll show you how to do that. Options are also useful in taking profits from markets which are not moving very much or static. They're also useful in taking profits when you know there will be a big directional movement, but are uncertain of the direction. Finally, options are a good way to manage risk in the market. You don't have to set stops, and if you set up your trade structures correctly, you'll have no exposure to black swans, big rapid changes in the market. So let's see how to do this. Let's represent our profit and loss on a diagram where the horizontal axis is the spot price and the vertical axis is our profit and loss. We can see that trading the spot is a simple line at 45 degrees. Below the entry we lose, above the entry we win. A call option payoff diagram looks like this. We've paid a premium for the option, which is our total downside. If the spot moves somewhat above the strike, the call is profitable. No matter how low the spot goes, our loss is limited to the premium that we've paid. A put option is the opposite. We pay a premium, and if the spot drops below the strike price, we are profitable. Again, note that no matter how high the spot price goes, our loss is limited to the premium paid. Now we can sell options as well. If you sell a put or short a put, the payoff looks like this. We collect the premium this time instead of paying it. If the spot goes higher, we get to keep our premium. If the spot goes below the strike price, the put exhibits a loss. The purchase and sale of multiple options are called spreads, and there are very many possible combinations. One of the most common is the call spread, where you buy a call at a lower strike and sell a call at a higher strike. This lowers the premium paid, as you can see here, compared to a long call, but also limits the upside profit. The same thing can be done with puts. I mentioned that you can use options to trade uncertain directional markets. One way is to buy a put and a call at the same strike price. This is called a straddle. Then the payoff looks like this. Lest you think this is a free ride, note that you have bought two options, but only one of them will be profitable. A strangle is similar, except that the strikes are different. This is a cheaper structure, but takes more spot movement to pay off. Here are the results of my trading from 2009. I had an overall 33% return. The number of wins was 6 times greater than the number of losses. Because of my option structures, the average profits were 2.5 times greater than the losses. I didn't overtrade the account. I just closed 16 trades over the period, and you can see the results for each one of them here, normalized in dollars per lot traded. I used no leverage, and the maximum of 15% of my equity was committed at any one time. So we can see that using options can control our downside risk. It is usually limited to just the net premiums paid unless you have a net short option. Selecting our strikes carefully, we can generate spreads which have a potential reward that is significantly higher than the risk. If you add this to a usually correct market assessment, you can be very profitable. Options are not a panacea. You must start with your market idea and then wait for a proper entry. Then and only then you design your option trade structure which reflects your market opinion. Then, of course, you must manage your open positions according to the spot movement. I hope this short presentation has piqued your interest in trading Forex with options. There's a lot more to know than this, but now you know there is a way to trade Forex without fear.